Hey everyone, I wanted to talk about the SPY in this video and also some of the messages I had been putting out throughout the week. I wanted to kind of give more structure to the information I was presenting. Um, First of all, the recap for today was we had a great rally after the uncertainty was lifted from the markets after the FOMC meeting. Based on the reaction, the market likes what it hears so far, and hopefully we can continue the bull rally. At this moment, I'm bullish. There were a lot of good breakouts yesterday and today, and that held. And with the big rally on huge volume today, I think we can break into new high territories. But let's go over some of the messages I sent out. One of the first messages I sent out was Monday morning at around 5:30 a.m. Pacific time, and I kind of saw that we would rally to 210, 211, and then pull back by Friday. Um, I get this information, or I use, I look at the option positions for the week, and I kind of, based on that, determine what's the most likely scenario, and then make a wild, educated guess what would happen. So, in my mind, I thought we would rally to 210, 211 before the FOMC meeting. And on Monday, we got up to 208 before the rally kind of stalled. And Tuesday, we had a pullback. Um, so it really didn't get to 210 until today, where we actually hit 211.20. And I think we pulled back to 210.30 at the closing. So it's possible tomorrow we go up 30, 40 cents, and then on Friday we pull back to 209.99 based on the option positioning. The option positioning changes every day, and I only get one snapshot of it per day. So usually it doesn't change too much day to day, but it can during significant events. So as we get closer to Friday, get a better picture of where we might close for the week. But overall, the week is pretty bullish, and I'm really glad that the FOMC meeting is over. It's always a drag that the market's just waiting on one event to determine its direction. Also during the week, I sent out this ultra scary message that the market was going to crash. Actually, I didn't intend for it to be an ultra scary message. It's just something that I've observed in the past and saw it during the week, and it put a little bit of fear in me actually when I saw it, because it's a very strong signal. I've seen it over and over on many stocks and ETFs before, and it's pretty reliable. And so, how can I be bullish and bearish at the same time? Well, I'm bullish on the weekly basis on that time frame because I looked at the option positioning and I saw that we would probably rally this week, just like I saw on Friday that we wouldn't close below 205. I mean, that was a certainty based on option positioning. So this signal here is something completely different. This is not based on option positioning. This is based on the stochastics and price action, and the time frame for this is much different than the weekly expiring options that I look at for for my weekly sentiment. So here, let's go back to some of the other SPY. This is the current ultra bearish signal based on the divergence of the stochastic and price action. This one here is the signal from 2011, and what I'm going to do is describe it in more detail. Between these two highs is this swing low. So let's just imagine that a confirmation of this ultra bearish signal would be a break of this swing low, and a invalidation of this ultra bearish signal would be a new higher high above this price. So we get a confirmation of this signal when price drops below this price right here, this low, and this signal becomes invalidated if price is able to go ahead and break into new highs above this price. And if you look here, when the signal was triggered on this high here, and then to the day, to the day when it actually, I got some funky stuff going here. I'll just move it here. Okay, so I figured out what the technical difficulty was, so let me just continue where I left off. So this would be the swing low, and this was the high that triggered the ultra bearish signal. And if we measure, let's say we'll measure from this day, let me move this bar out of here. If we measure from this day to when the low is actually broken, and remember this is the weekly chart, so we'll measure it here, and you'll see this is 91 days. So this is about 3 months, 3 months of trading before the bearish signal is actually triggered. So that's more like a medium-term signal. We'll take a look here at same thing. This is 2007, and again we have the low here, swing low, and then we have the this bearish signal being triggered on this bar. So from this bar to when the low was broken, again is about 98 days. So that's 3 months out. 3 months out from when the signal was triggered. And then we'll take a look at here is 2000, I believe. Yes, 2000. So here here's the low. Here's the low between the highs, and here's the signal here on this candle right here. And if we measure when the low was broken, here it's broken but recovered, but when it actually first closed below, this was around, let's say here, 266 days. So this is a very long-term signal in this 2000 case. So it's possible that I can be bullish on the shorter time frame and yet bearish in the longer or medium term, medium time frame. So I hope that it's not confusing that I'm sending out a bearish signal and a bullish signal. It's just like I said in the video, the sky's not going to crash down tomorrow, but you have to keep this signal in the back of your mind. Now, like I said, what invalidates this signal? What makes it no longer in effect? And that would be a break of this high would invalidate this signal. So as long as we're trading between this zone here, this signal could be in effect for as long as, and we saw in this case, over 200 something days. So, something to keep in mind. And then the last thing that I was kind of sent out, I believe it was today, was that I saw a possible head and shoulder, and this would be one shoulder, and then this would be the head, and intraday, when I was looking at this, and intraday, when we were here and going negative, breaking below this low, it looked like we were going to form a shoulder going downwards. And that was, of course, before the FOMC meeting. And I told many of you guys, don't do anything until after the FOMC meeting, because you can easily be shaken out. The signals aren't correct because it's just an intraday signal. And obviously, since we broke above this high, this head and shoulder is invalidated. But I had to keep this in mind because it was looking intraday like it could have been a head and shoulder. So, the charts you have to constantly review and take a look at from different perspectives, from different time frames, and determine what you think the dominant pattern is. Let's go one last thing. Let's go ahead and take a look at the hourly. And I tell you guys that the hourly always gives the earliest signal for a reversal that I think is pretty reliable. And if you see from the downtrend here, from the start of the downtrend, let's say this was the first higher high, lower high, lower high here, lower high here, lower high here, lower high here, and this here is the first higher high. And this was the first bullish signal, and I believe this was the day we closed above the 50-day. And you can see we went low, did not make a lower low, and we definitely made a higher high here. So the hourly time frame, you can be bullish, while at the same time we're in kind of a downtrend mode. So on different time frames you can have different sentiments, and you kind of have to keep all of them in mind. Just like well, I'll go through some of the other stocks in the different videos, but suffice to say that I hope that those messages that I sent out aren't conflicting, and that you put them in the proper time frame, and you'll be able to trade appropriately. Now, I'm not going to go start shorting the market here, because I think there's an ultra bearish signal coming. In fact, on the daily chart, this looks very bullish, and we technically won't have a confirmed uptrend until we break this high here, but because it's here's the low, high, higher low, and then a break of the high would be a confirmed uptrend. But with all the breakouts working, it's pretty safe to say we're probably going to make a higher high. Notice this line. This was the line that started it all. We had the 210.50, which was the support, and we had it broken. And lo and behold, where do we close today? We closed at 210.46, 4 pennies shy of the last support level we had. So hopefully we'll get across it on Thursday, and I'm saying we might close below 210, but I don't think it's going to be an issue, in terms of the rally. I think we'll continue on Monday when a whole new set of options can let us know where we're heading that week. So I think that's it for the video. If you find my videos informative and helpful, please click on the subscribe button so you can keep updated with when new videos come out. And I appreciate your time watching this. Thank you.